Hey guys, what's up? It's AB Trade, and today I wanted to do a video over how trading is simple. Do not overcomplicate your trading. Do not put so many indicators on your chart that you can't even see the candlesticks. And above all else, eliminate all emotions when trading. Trading is simple. Let me show you how. Alright, so in the Discord group chat from yesterday, I said SPY, we're looking for it to go above 289.4. If not, then we're in a downtrend from the 15-minute channel. Alright, so this is from yesterday. Why did I say that SPY, that I wanted SPY to be above 289.4? Let's see, yesterday, where the heck are we? So yesterday was Monday. So 289.4. Why did I want it above 289.4? Because as you can see here, I mentioned it out around 954, so around here. 289.4 is what is up here. Up there is showing that we do have movement to the upside. I was looking at the 15-minute chart, okay, and if you look here on the 15-minute chart, 289.4, which is right about here, is crucial. You see, we saw that this is a support zone. We know that our downtrend is like this, correct? So I knew that if we broke above 289.4, then we would start to get out of this trend and move back up. If not, we're going to continue the downtrend. So what did we see yesterday? We saw no movement back up to around 289.4, so we just continue to little relax and chill on the way back down. So I said I was going to trade it above 289.4. We did not get that. No trade. That's how simple it is. Okay. Now let's look at another example. Apple following the 10% strategy from Friday and will slowly fade throughout the rest of the day unless volume picks up or there's a catalyst. So let's look at Apple from yesterday. So as you can see here, we closed, so the trading range from the previous day, which was Friday, is we have it between 225 and 221, but we closed in the bottom portion of this range. During the aftermarket of that day, we started going down, and then we tried to push up, but we just get rejected at this resistance point, and then we start to go down. This is what a 10% strategy is, so that means that we're most likely going to continue in the direction that we were headed the previous day. So as you can see here, we just crashed down, and we just continue crashing, and then we just consolidated below the support. So how simple was that? You know, knowing that using your pre-market support and resistance levels to know where you're going in at. So you're like, okay, look, I'm expecting the move to go down. If I go under the pre-market low, then I will short or buy a put. That simple, right? I buy a put here. I see if it drops down to the next support. If not, I can hold further. And if it drops through and then it comes back up, I just cut my losses when it comes back up. That's how simple it is. Trading is simple. Okay. Now, if you're having too much emotion when you're trading, the problem when emotion comes into effect in trading is because when you bring in the financial aspect, when you have money on the line, then emotions start getting like overwhelming, and in your system, you know that you can actually lose money. To defeat that, or to slowly build up and not understand the money aspect, to eliminate the emotions, the best thing to do is to start with a super small size. So what's awesome is you could buy like contracts for 10 bucks, right? Start with small size, so that if you lose it, so what? And then you slowly start building up the amount of money that you use, so that you slowly get used to building more risk. Yes, there is a way of risking $1 million and slowly getting used to that, but for most people, you want to, for two reasons. You want to start with a little bit of money and keep trading up and adding to your size. For the first reason, to slowly eliminate emotions, and the second, to prove to yourself that you can trade before you put a lot of money on the line. But I just want to show you how simple this is, that we're just looking at pre-market levels, and we're looking at tendencies that we see in the market when it's trending down and closes in the bottom percent of the range. We most likely have the continuation from the previous day. Let's go to the next example. Tesla, intraday trading range between 271 and 276. So let's take a look at that. Yesterday, intraday trading range between, we saw that it was bouncing in between 271 and 276. So what are we going to do? If it drops below 271, then we buy a put, and if it starts to reverse, then we cut our losses there. If it goes above 276 with volume, which it did, the volume started to pick up here, then we go long with a call, and if not, it drops below, and we cut our losses. All right, that's how simple this is. You either win or you lose. All you can do is trade high probability setups that make sense to you and follow your personal trading strategy. All right, one more. AMD, haha, the highlight. Perfect breakout to the upside. Watch for major resistance at 30. So as we can see here, in the morning, let's get in a bit closer look. So as I said, perfect breakout. Why? Because we are starting to make these new highs here, and we're trending up massively. So this is what I mean by we're having a breakout above the level, the next high. We're trending up, and we're just doing great. So I said, watch out. Why? So 30 is an obviously psychological barrier, and now that we're hit 30, we're a little going crazy, but that doesn't matter. We're going to look at the trade. First trade you could have taken, buying when he got above this high with volume, because the volume definitely stepped in as we started to make this new high. You buy a call and you try to ride it up as far as you can. If not, you cut losses when it comes back to this red bar. Piece of cake. Here we go. We have this triangle pattern here. You enter, right? You enter right here. You wait for it to go up about the height of the initial beginning of it. So usually what the beginning before the triangle consolidation is how far it will run. So as you can see, we ran this far. We can expect it to run that far. So again, we get in expecting it to run about this far, which it did, up to 30. But again, if we were wrong, and when we bought in, when the volume picked up above here, but we exit back at this red line, then again, small loss, simple trade. Simple, I mean simple because we know the setups. We know the probability of them working out is in our favor. We know we're trading a high probability setup. We know that we enter and we have a predefined stop loss where we know where we're going to exit at a loss, or we know where we're going to exit for profit. All right, guys, let me just stress that if your trading rules is too complicated, please, I urge you to simplify it. Stick to the basics. That is what works. Don't overcomplicate your trading. Keep your trading simple. Please like, comment, and subscribe. See y'all in the next video.